Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka is moving closer to completing its full external debt restructure following a new agreement with holders of the defaulted Sri Lankan Airlines bond. According to a recent filing on the Singapore Stock Exchange, Treasury Secretary Harshana Surya Perumal said the deal marks another major step towards normalizing the country's relations with external creditors and stabilizing public finances. He noted in the filing that the agreement will bring about 99% of Sri Lanka's external debt under settlement. The Treasury also indicated that the government is expecting continued support from its official partners, saying such backing is essential to strengthen the country's credit rating and prepare for a future return to global capital markets. Under the agreement, the sovereign guaranteed Sri Lankan Airlines bond will be exchanged for 4 new 4% amortizing sovereign bonds, along with $60 million cash component. Meanwhile, around $250 million worth of defaulted sovereign bonds remain unresolved due to a holdout creditor. Sri Lanka's services sector recorded a strong expansion in October, according to the latest Purchasing Managers Index compiled by the central bank. The index rose to 66, up from 58.7 in September, signaling faster growth across key services industries. The central bank reported that business activities strengthened further, mainly supported by robust wholesale and retail trade. It is also noted that financial services continue to improve, with increased lending contributing to the overall momentum. There was broad expansion across several service categories, including personal service activities and goods transportation, which helped lift the sector's performance. However, new businesses grew at a slower pace. The indicator reached 61.5 compared to 65.2 in September, reflecting high demand in trade and improved activity in financial services, though at a moderate level. Employment trends also showed a slight slowdown. The employment index moved to 52.5 from 53.1 as firms adjusted hiring based on operational requirements. Backlogs of work remained unchanged, staying at 47.8. Looking ahead, the central bank said business activity expectations for the next 3 months have strengthened. This outlook is supported by improving macroeconomic conditions, rising tourist arrivals, and anticipated demand during the upcoming festive season. In a recent development, foreign investors reduced their exposure to Sri Lanka government securities, selling $3.07 million worth of rupee bonds during the week ending November 13. Central bank data showed that foreign holdings fell from a 2-year high at a time when the rupee has come under gradual depreciation pressure. This marks the second instance of not selling within the last 12 weeks. Foreign investors offloaded 920 million rupees worth of securities during the week, reflecting cautious sentiment as the currency weakened amid rising imports, stronger private credit growth, and continued reserve building purchases by the central bank. The decline followed a period of stability. In the previous week, foreign holdings remained steady after offshore investors recorded a significant net purchase of 10.36 billion rupees in late October. As of November 13, total foreign holdings in Sri Lanka's treasury bonds stood at 140.4 billion rupees or $468 million, down from the highest level seen since November last year. Despite the recent outflows, the country has recorded net inflows of 33.82 billion rupees over the past 12 weeks. However, earlier in the year, Sri Lanka experienced outflows soon after a major tariff-related announcement by US President, which added pressure on the rupee. Data also shows that since December 26 last year, rupee bonds have attracted around 71.2 billion rupees in foreign inflows. Analysts attribute this trend to deflationary policies and restrained imports, which created a more favorable environment for bond investors. By comparison, Sri Lanka saw foreign outflows of 48.2 billion rupees in 2024, with the majority occurring in the first 9 months of the year. Sri Lanka has finalized a bilateral debt restructuring agreement with Denmark, securing the rescheduling of around 39 million US dollars in outstanding loans. According to the Finance Ministry, the agreement marks an important step in the country's efforts to restore debt sustainability and support economic recovery. The restructuring follows bilateral discussions held after Sri Lanka concluded its Memorandum of Understanding with the Official Creditor Committee. Denmark has agreed to provide debt relief by rescheduling the loans owed by Sri Lanka. The agreement was signed by Treasury Secretary and Danish Foreign Minister. The Finance Ministry noted that the deal is expected to strengthen the long-standing relationship between the two countries and encourage deeper cooperation. The ministry also expressed appreciation to the government of Denmark for its continued support and partnership in Sri Lanka's economic stabilization efforts. In a recent development, Sri Lanka announced an ambitious plan to attract 4 million tourists and earn 8 billion US dollars in tourism revenue by the year 2030. The announcement was made by Foreign Affairs, Foreign Employment and Tourism Minister during the India-Sri Lankan Tourism Relations Program held in Colombo. The minister highlighted that tourism remains a core pillar of the national economy. He noted that Sri Lanka recently welcomed its 2 millionth visitor for the year, signaling a strong recovery in the sector. The country's tourism priorities were outlined with a focus on sustainability, market diversification, improved air connectivity, and digital transformation. The minister also explained that Sri Lanka is aligning its national tourism strategy with global trends, including the integration of artificial intelligence in line with the principle of the RIA Declaration on the Future of Tourism. He pointed to a significant rise in Indian arrivals, supported by visa-free entry and targeted promotional campaigns. This has positioned Sri Lanka as a leading short-haul destination for Indian travelers. The minister also highlighted several emerging tourism segments. These include MICE tourism, heritage trails, beach tourism, hospitality-related investments, and film tourism. He said Sri Lanka sees strong potential in religious tourism, particularly through Buddhist pilgrimage routes and the popular Ramayan Trail. He further commented that the long-standing 2,500-year relationship between Sri Lanka and India makes tourism cooperation both natural and mutually beneficial, adding the initiative is expected to deepen bilateral ties and create new opportunities for collaboration. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.52% and the 182-day T-bill rate stands at 7.91%, with no change in the basis points compared to the last week. The 1-year T-bill rate stands at 8.03%, 1 basis points down compared to the previous week. Thank you for watching. We'll be back next week.